Hello and welcome to another Sprinterra video. Today we're going to be talking about deferred revenue. So in this scenario, we're going to walk through an invoice that we're creating, which is for some sort of annual subscription. And the intention is that it would be deferred evenly across the 12 months of 2026. So first thing you want to look at is at our deferral codes. So you have the option to set up different deferral frequencies in the way that you want it broken out. In this case, we've already created a 12-month even deferral sequence. You have the opportunity to determine, if there's like an immediate amount you want to recognize and then break out the remainder over a certain amount of periods, how you want to break it out. If you want to offset, push out the start a bit, how many occurrences are there going to be, et cetera, et cetera. But these deferral codes are going to be where all of the kind of the nuts and bolts of how your deferral is going to work is broken out. Okay, so the next thing that we're going to do before we get into what this actually looks like is we're going to create our invoice, which is going to be just an annual subscription broken out over 12 months. And this is we're just going to copy this based off of a sample that we created earlier so that we can save a bit of time. So we're just going to grab the existing invoice, we're going to copy it, then we're going to go to the plus up top, and we're going to create a new one, and then we're going to paste it in here. Now, for purposes of today's recording, we're just going to do it as of the 1st of January. And this is ultimately going to break it out on the 1st of each month for 2026 once we get it up and running. So we're just going to, you can see this is a $60,000 subscription. We're saying it's some sort of support subscription that we're being paid for 2026, and we're starting on the 1st of January. So we're just going to release this. And one key thing about this invoice is we're referencing deferral code 12M on it. So that deferral code that I showed you at the beginning of the recording, the 12M, we're referencing, hey, we want this invoice to run based off of this deferral code. So what happens then is if we go to our deferred revenue module and we go into run recognition, and we're going to say recognize anything that is ready for recognition as of the 1st of January. And then we're going to take a look at, you can see this latest deferral schedule was created. So if I click into it, this new deferral schedule was created based off of our invoice. You can see it's referencing up here AR 014028, which matches our invoice that we just created. It's a $60,000 amount. And you can see down here, the transactions are set up so that on each of the first of the months, it's going to recognize our revenue. Okay, so this deferral schedule was created automatically when we created the invoice due to the fact that we tied that invoice to the deferral code of 12M. So what's going to happen if we go back here is we're just going to select this to run, which is going to create the recognition. Now, one thing to note, so I'm doing this manually, just kind of for demonstration sake. However, going forward and in your use cases, you'll have the ability to set up some sort of automation schedule, which will come in here and it'll automatically run revenue recognition for the appropriate transactions. So depending upon what you've got set up and what you need to run, the system can automatically create those transactions. Now, if we jump over to our deferral schedule that we just took a peek at, the one tied to our new AR invoice here, if we click into that, now that we've run the recognition, what's happened is the system created that recognition entry. So if we look down here, we can now see that the status of the transaction for January 1st is posted. It created this GL batch number. And if we look into the GL batch number, it's essentially going to move the from deferred revenue into our sales revenue. So when we originally posted the invoice, It hit accounts receivable as it typically would, and then it hit deferred revenue for the entire $60,000. Now for January 1, we're recognizing the first $5,000 of it. As a result, we're moving $5,000 from deferred revenue into sales revenue. And then as we move through here and as we recognize revenue on February 1st, March 1st, etc., we're going to see the GL entries created. That way, by the time we get to December 1st, we would then have the entire balance of $60,000 moved over from our deferred revenue into our sales revenue, since that's the revenue account we had listed on the invoice. So that's deferred revenue kind of in a nutshell. If you have any questions that come up about this, please feel free to reach out to us and we're happy to help. Thank you for your time and have a great one.